Strive Asset Management launching a new index fund today that you might call the anti-ESG. Strive says its corporate aim is, in its words, maximizing value over all other agendas. And according to a press release, the company says its priority is to serve its clients' financial interests without regard to social or political objectives. In addition, Strive is sending a new letter to Apple calling on the tech giant to base hiring only on merit, not on race or sex or politics. And it's sending a letter to Disney calling for an end to what Strive calls the company's politicized behaviors. Joining us now, Strive founder and executive chairman Vivek Ramaswamy. His latest book is titled A Nation of Victims, Identity Politics, The Death of Merit, and the Path Back to Excellence. You think, and Vivek, there's 500 stocks I think they're going to be in this new ETF. Is it possible to find any that are excellent and have some of these other little bells and whistles that ESG loves? Is it possible, or are they mutually exclusive in your view?
So, Joe, I don't think they're mutually exclusive, but the purpose of this new fund is to offer an index offering exposure to 500 of the largest U.S. publicly traded companies. But the goal is actually to drive hopefully positive change through engagement, not through stock selection or selective divestment, but through engagement. And that's what we wanted to demonstrate in our first act of engagement after launching this fund with the letters that I sent to the boards of both Apple and Disney. And the clear message to corporate America is actually pretty simple. Focus on delivering excellent products and services to your customers over all other agendas and maximize shareholder value that way, rather than pushing these other social and political agendas. And the interesting thing, Joe, is even if you look at a company like Apple, they adopted this so-called racial equity audit. In many cases, actually, the boards of these companies, like Apple, recommended to the shareholders against adopting that proposal. And yet, with the votes of BlackRock and other large asset managers, these proposals still carry majority shareholder support. So my hope is that by bringing a new shareholder voice to the table, we're able to bring true diversity into the boardroom and actually debate these ideas where behind closed doors, many people may have the same view that we do, but very few of them are actually saying it out in the open. By saying it out loud, we hope we bring that diversity of perspectives to capital markets and to corporate America's boardrooms.
I mean, it can go wrong, obviously. I don't know if it always goes wrong. And what I'm talking about is a focus on ESG. And it's pointed out that there's no doubt that we sort of have handicapped our own domestic energy producers and really sort of given the keys to the kingdom to China and others. And as far as fiduciaries go, they failed miserably, any of the companies that sort of force these changes. And I can see it there, but I'm not sure I can see it just across the board, Vivek, but I bet you could help me see it.
Well, look, I think that I'm not necessarily saying it's across the board, but there are most companies in corporate America today are owned by large asset managers that are advancing these ESG-linked agendas. And you're right, on the E prong, this has affected the energy sector quite a bit. That's the environmental prong of the ESG movement. We saw that, and actually earlier this month, wrote a letter to the board of Chevron laying out some of those issues. Joe, in this latest wave, we're focusing on the S prong, the social prong of the ESG movement. And the question I ask to Apple and the question I ask to Disney is, why do these politicized behaviors best advance the interests of your stockholders? Let's take Disney going to war with the state of Florida over a piece of legislation. The question isn't whether that was the right question or not for society. That's a different debate. The right question to ask is, why was this in the best interests of Disney's stockholders? That is the appropriate question for the board to ask. And I think subsequent events have revealed that it was not in the best interests of Disney stockholders. And that's the debate that boards actually need to be having. And I hope as a shareholder, we guide them back to be having those debates. And that was part of the point of unveiling not only this fund, but future funds.
Shepard Smith here. Thanks for watching CNBC on YouTube.